Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday the 29th, the last day of the month for August. And for the month, it was positive, except for bonds. And the crude oil lost a little bit of ground, as did Bitcoin. So let's take a look at these charts and make some sense of it. It was a little bit of profit taking for the week. But on the daily time frame of the S&P 500, we still see this very clear pattern of higher highs and higher lows. The last bounce occurred right at the anchor from the month-to-date volume-weighted average price. And today we experienced a little gap lower and then just kind of turned sideways. For me, it means the market has turned a little bit more neutral here simply because we're below declining 5-day moving average. It doesn't mean it's bearish. It means more neutral, like I said. So you don't want to be a buyer of the SPY, not right here, not yet. Before I forget, let's talk about crypto as well. Bitcoin had looked like it was going to undercut this low and then rally, and I did in fact buy some over in here, and then I basically spit it out, break even. I didn't want to ride it down here. Now we're approaching the April 7th low. That would bring us down to about 107, just about a little bit underneath that. So this is likely, I think, to become a important level that we're could bounce from. I don't see any evidence of it yet. Here, looking at that 4-hour chart, it's straight down the last day or so. So there's no evidence of support yet. If I was to be a buyer in there, it would be for a very small amount, and then I would want to see that it does in fact hold this level. Ethereum is pulling back. I think it's likely, as we've mentioned, we broke to a new all-time high over here just a couple weeks ago with this move, and things really got exceedingly bullish with BMNR and some of those other names. But after that failed breakout, I think it's likely we come down and probably test underneath this 4,000 level. This is the prior peak in here. So to undercut that a little bit, come down to this anchor seems reasonable and likely to me. If that was to fail to hold, you'd want to keep an eye on this anchor as well. So basically between 4,000 and 3750 to 4,000 looks like a key level in there. Solana, I do own some of this one. I scaled back a little bit. I had a full position, but these breakouts continue to be sold into. Now, it does have a pattern of higher highs and higher lows, but I wasn't comfortable riding this thing down. I think it's probably the best looking of the major cryptos that are out there, and the one I'm most interested in. Sometimes people ask me to look at some other names, Litecoin, Link, Cardano. I just don't trade those things, and this isn't a crypto service. So I'm just going to keep it to the main ones. The NASDAQ, as we mentioned last week, this has the possibility that we're carving out a lower high over here, and this is a neckline. It could be a head and shoulders pattern. I don't put a lot of weight into these patterns. What it means, the only thing it means is the pattern of higher highs and higher lows turns into a pattern of lower highs and lower lows. So if we were to continue lower, this is the most obvious level that is likely to find buyers early next week, 561. That is the 50-day moving average, that dashed blue line, and the anchor off of this low right here. I kind of drew that in the wrong spot, so let's just drag that anchor over here. So that's where it looks like this market is likely to come down to. I'd really like for that level to fail to hold, and then we come down through the neckline. If we came down through the neckline, you'd have all kinds of people talking about a head and shoulders pattern and how it's the top. Most likely it would just suck in short sellers, take out some stops, and then rally back up. Meanwhile, on the 30-minute time frame, you can see we held the month-to-date anchor, and we are below a declining 5-day moving average, so that says caution going into next week. If we rally up, get stuck below the 5, and then break below here, then I think you could look for a quick move down towards that 560 level. The Russell 2000 has been the better performing group. I was suggesting subscribers, if you're long the Russell 2000, that you might want to have a stop under here, simply because the pattern of higher lows was broken, and now we have a flat 5-day moving average, which we're under. The semiconductors experienced a little bit deeper profit taking. I was hoping maybe we would pull back, make a higher low. Instead, it undercut the pattern of these higher lows. And now, same story. We've got that 50-day moving average right just below us. Let's put this anchor back on there as well. And you can see that this anchor has been more important than that 50-day moving average. We've bounced from there twice and right over here, really. So that, to me, is more important. If we slightly undercut the 50 and bounce, it's likely to find buyers there. And I would like to see a lower high, undercut this, and then same thing, trap people in and then reversal. That's too far ahead for now. It's just something to start thinking about. But anytime you see a quick undercut of a major support level like this, if there's not major news, then it's typically going to be a trap. And speaking of semiconductors, of course, we should talk about NVIDIA. NVIDIA is showing that same anchor right down here and the 50-day moving average. And again, what's more important, this anchor that's been touched 2 times or the 50 that hasn't been touched yet? That's up to you to decide. I put more weight in the volume weighted average price. If we're to undercut here and then start to rally, then make the lower high, then we might be in for a bigger, a deeper pullback. But for now, we're kind of stuck in this range in NVIDIA, and that's not a bad thing. We've had a really large rally here, so to digest this through time a little bit wouldn't be a bad thing at all. So back to the semiconductor index. Just cautious in here, that's all. Not bearish. Not when you have the longer-term trend still showing such a strong uptrend. Financial stocks traded and closed at a new all-time high. Bonds just continue to be a complete waste of time in here. And energy names are the stronger group here. They've been rallying 3-4 straight days right now. I would expect next week it's likely we'll start to see some pullback and digest these gains before it's able to sustain a larger move. Apple is one that Alpha Trends subscribers are long at $228.50. We did take a third off with a gain of $44 per share, and our stop is $229.32 right now, meaning we can't lose money on that one, so let it continue to go. I got stopped out of some Palantir this week, and it just looks like it's going to need to prove itself here at the 50-day moving average. And it's a likely place where it will find buyers and be able to bounce, but the low risk level hasn't presented itself yet. Tesla is pulling back exactly the way I wanted it to. These dots were drawn in 2 days ago. So we're pulling back to the 200-day moving average, the 20-day moving average. And this is just why you don't chase these breakouts. You have to look at these breakouts that occur and say, do I want to be a buyer here? Because these breakouts are preceded by, in this case, a move from 300 to 340, and in this case, from 315 to 350. So they become extended and in need of a pullback. If you're buying these breakouts, you're chasing. You're late to the game, and you're going to end up, most likely spitting it out on these types of moves. So Tesla's one to keep an eye on. I don't think it's ready to, to show us that it's ready to be a purchase yet. Amazon is also one that's, I'm long a little bit in here, but I don't like the way it behaves. In fact, I'm not long. I was long coming into today, but I decided to get out. I'm taking next week off, so I wasn't going to hold that one. Google. New all-time highs here, so it's it's a stock picker's environment right now. Meta looked like maybe it had the possibility to break this little pattern of lower highs, but failed in here today. So it continues to hold along that 50-day moving average. Don't forget, anytime any level of support is tested more frequently, it's more likely it is that it's going to fail to hold. Microsoft also flirting with this 50-day moving average. This looks like an important level, and you could look at this 30-minute time frame and say that looks like an inverted head and shoulders pattern. What is an inverted head and shoulders pattern? It's just simply a reversal of the lower highs and lower lows that were there in it previously. Then we make a higher low and a higher high. That completes your inverted head and shoulders pattern, and that might lead to a continued bounce, perhaps up to the anchor from the all-time high, which would put it up near about 518 from a trading perspective. Netflix, I was long this one and spit this one out today. It looked like it wanted to get going yesterday afternoon, but didn't hold. It didn't follow through. If this can continue to build in here next week. It might be setting up for further upside consolidation. The issue is now that next week we're going to be getting rid of these 4 days, and then the week after that these 5 days. So that means there's going to be a declining slope to the 50-day moving average, and the 20 will come up through it. So it might need a week or two before Netflix is really able to get going again. Anyways, that'll do it for me. Enjoy your long weekend, and thanks for tuning in.